Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report, December 20th, 2025. And is this the Santa rally that we've been waiting for since last year? Well, remember folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's see what year to date is doing with the ETFs, with the popular ETFs that we look at from the S&P 500 group, or the S&P group, I should say. Gold is still leading the pack by a long way. Then comes the XSD, which is the Semiconductor ETF, then the Technology ETF right after that. NASDAQ 100 here, that's the QQQs. And then down here, the S&P 500. So the only thing that's in the red right now for the year is the XOP, which is the oil and gas exploration. And of course, the price of oil has been dropping quite a bit, especially for the driving season here, which is very, very nice. And that is why the energy sector is down here. But there's other parts of the energy section that are doing pretty good. But we're still concerned with these ETFs up here. Let's look at 1 week, because this past week was, well, it started off like we were never going to go back up again, and it's ending that it's never going to go back down again. So it was just a crazy, crazy week. And what's leading the pack? Consumer discretionary. Remember, this is only 1 week. Gold is right here, utilities here, healthcare a little just slightly positive, and the NASDAQ 100, again, the QQQs up just 0.4%, and the S&P down just 0.02%. And down here you have the semiconductor down about 0.5%, and you have technology up about 0.17%, which is about 0.2%. So, and housing down here, poor housing, just can't get out of the way, down about 2.86%. And here's your energy, again, down almost 4%. And the energy fund itself down 2.5%. So again, the S&P 500 just barely, we're right around break even, just slightly under break even. And we have a lot of ETFs in the red for the 1 week. Now, let's look at what happened yesterday, which was the beginning of a nice rally. And we saw the XSD up, which is the semiconductor, up the most, technology up the second most, and consumer discretionary is hanging in there still. Well, that's because everybody's doing shopping for the holidays, so that's one reason. And here's the NASDAQ 100, and the S&P up about half that of the NASDAQ 100. So the end of the week is looking much, much better than the beginning of the much better than the beginning of the week. And that's how they stand as of yesterday, and I'm recording this on Friday, so this was yesterday's 1 day move. Now let's look at the QQQs, and I want to show you something. And we had talked about this in our daily letter, that and we were looking at this point right here, and we said if the market goes up today, we're probably going to get a little buy signal on the short-term indicator. And so now I'm recording this Friday, a little afternoon time, and we can see that for the past 2 days, Thursday and Friday, we've had a nice rally in here. And down here, we are looking at the 20-day moving average and the 50-day moving average moving in tandem here. So the 20-day moving average is this green line, and you can see it's just starting to turn up. And as I'm recording this, we are above, or the QQQs are above both of those averages. Very, very nice. Now down here on Thursday, we're looking at the volume, and we see that the volume was nice, and that's what we wanted to see. We talked about that in Wednesday's letter, or Wednesday's daily letter, about we wanted to see good volume on this day if the market went up on Thursday, and it sure did. Very nice. Is it enough to turn this indicator around down here, which is our intermediate term indicator? Well, let's look at the next slide. Same slide as we just saw, and now we have this indicator that was topping out. We talked about that beginning of last week, and now so we had that decline, and then now it's starting to go up. So right now, and this is before the market closes on Friday, we are seeing a buy signal here, but we want to see it close with this black line over the red line. So this is more of a longer term indicator, and down here is our intermediate term indicator. Now this is something I want to show you down here, is that we have this line with this indicator making a bottom here, rising up, making a lower high than here, which we didn't like, and now it seems to be turning around, so it's going to make a higher low. So yeah, you get all these conflicting signals in here, but we're looking at now and over this next coming week, which will be a holiday week, folks. Yeah, there's not going to be much trading going on except rebalancing of a few portfolios. So we'll probably see very, very light volume, but at least people are getting in the holiday spirit with 2 up days in a row. But look at this downturn in here. This was like 4 down out of 5 days right in here. And it got a little scary because we were below the 20-day moving average and the 50-day moving average. But now, hopefully, we close above that, as I mentioned for the last slide, because I'm recording this just a couple hours before the market close on Friday. And let us look at all the returns. And so this week over last week, but over the beginning of the month, not much change, just dropped a little bit since the beginning of the month. So December has been a pretty tough month for the technology area in here, just by a little bit. So we're looking at about not even a point drop, well, a little bit more than a point drop in the index itself, the XLK, and our stocks are down about 2.5% or so, or a little bit more than 2.5%. But still up 46.5%. So these are the top stocks in the technology ETF. And again, for those of you who are new, and there's quite a few of you this past week that are new to this weekend letter, and we use the clean surplus methodology and pick the top stocks in the top ETFs. So you have the semiconductor and the technology, which are the top ETFs. And we're going to see that in the next slide here. So these ETFs really outperform the S&P 500, because the S&P 500 right now, as I'm recording this, is up 16.7%. Just 0.1% higher than it was at the beginning of the month. So that index has been pretty even all month long, up and down, yes. And the semiconductor has dropped about 4.5 points in here. Now let's go to healthcare. Year to date, the XLV is up 14.3%, and this is one area where we are not outperforming the ETF, which is very, very rare for us. Housing or home builders down here up barely for the year. This is for the entire year to date. But the stocks that we have in our home builders ETF for this year is up 16%. So pretty nice. For an ETF that's down, we've done very, very well by picking the stocks. NASDAQ 100 up 21.5%. Our top stocks in the NASDAQ 100 portfolio up 16.4%. And the NASDAQ, or I should say the ETF sector all-stars up 16.2%. And what we've done for 2026 is we combined these two portfolios because there were a lot of overlapping stocks. So we made just one portfolio, and it will be the NASDAQ 100 top stocks, and we'll stick with that because that's done well for us over the years. Now, I want to show you something very, very important. Let's go back 7 years when we started keeping track of these portfolios, because we researched the ETFs from 2015 right up to 2019, and then we put actual portfolios into effect. So over 7 years, well, it's not exactly 7 years, it's about 10 days shy of 7 years, so almost the end of 2025, the S&P 500 up 174%, which is nice. Now, the XLK, which is the technology ETF, up 367%. I know I have a dollar sign in here. That should be a percent sign. But the top stocks in our portfolio, in the technology portfolio, up 919%. So you can see by, if you do your homework and say, all right, I want any index, any ETF, why not pick the above average stocks in each ETF and leave the below average stocks for somebody else to buy? So why buy the whole ETF? Because you're going to have above average stocks and below average stocks. So our clean surplus methodology helps us pick stocks that are the best performing or have the best numbers in that ETF, and then the stocks will follow those good numbers. So 919% of the top stocks, almost tripling, let's call 2.5 times that of the XLK, which is more than double the S&P 500. Now, when we look at the semiconductor, wow, again, S&P up 174%. The XSD, which is the semiconductor ETF, the S&P semiconductor ETF, up 400%, 404%, but the top stocks up over 1,000%. But let's go look at 2022 when the market was down that year and the S&P was down 19.5%. The NASDAQ was down 34%. So remember that. But look at the top stocks here, down 42%. So even though you're gaining the most over time, you have a more volatile portfolio here. But as long as you earn more than the average, you're allowed to go down more than the average, as long as when everything goes up, you go up more than the averages. And this shows that we're almost 8 times more than the S&P 500. And these portfolios only have about five to seven stocks in each year. So it's not something that you want to put your entire portfolio in, but it could be a part of your portfolio. I mean, why not own the technology and the semiconductor? These are these stocks that lead innovation and technology, semiconductors. Yeah, those are the areas of the future. If the world economy is to grow, it will be in the technology and semiconductor areas, especially technology, which we like very, very much. So yeah, over 7 years or 10 days, just shy of 7 years, we could see that we're up over almost 1,000% in technology and definitely 1,000% in the semiconductor area. So, folks, we had a tumultuous week. It started out terrible, but Thursday and Friday are making up for it. So we're going into the holiday weekend, and you all have a good holiday this week, and don't get too drunk at the parties or anything like that. Remember, you have to drive, and there's other people on the road besides you. So enjoy yourself. Happy holidays to everybody, and we'll see you back here in a couple of days.